All right. Good morning. Welcome to the Daily Money Markets on the TDMM podcast. My name is Che Yusuf. It's actually another day in terms of the market analysis. So we want to come back and actually, go in the market, in the global financial trading market, and to see what the market is going at the moment. In terms of the big story, everyone knows that it's 100 days of Donald Trump in a presidential seat in the United States. So people they are just reviewing what Donald Trump been actually doing for these 100 days and how it's been actually impacting the market itself, the forex market, the contract for difference market, as well as maybe the stocks and the tech as well. So we saw this morning most of the tech companies fall. We saw when it comes to the regional ways, German Perelium GDP actually rises with the zero point 0.2 quarter to quarter. Estimated it was 0.2 as well. So it didn't really push above the estimation. It just go on a balance 0.02 estimated to 0.02. Of course, when it comes to Germany, we've been actually talking about it earlier this year around January. Remember they had a election, so as results of the election there was no actually winner, and then what happened is they had to form some sort like a coalition with a different government. They formed the coalition. Couple of months later they wanted to pass the budget. That coalition didn't actually become strong and success and support the budget to pass. Same scenario like what happened in South Africa currently. But then they actually had another negotiation with the different parties. Their parties, I said it before, they're central party. The other one will be the Central East party. The other one will be the Central West. All those type of parties that are in Germany. So yeah, the GDP didn't really do well because of I think that incentive. But the big one, of course, it's a Donald Trump 100 days. The market hasn't really performing well for past 2 months. But we saw for the beginning of this month, especially April, we saw the market starting to recover. Going back actually to the point where it was. It hasn't reached yet to the point where it was, but you can see the momentum of what the market is doing. Again, the Feds they came in terms of the interest rate. They wanted to cut the interest rate. They put the interest rate on a pause. Donald Trump, he spoke about it. He said the Fed they should have cut the interest rate, but again, they always say that the treasury is supposed to be a different entity than the politics or than the government itself. So the treasury they're going to have to do what treasury does. So the Feds they put the interest rate on a pause, putting it in the same where Trump renews Powell criticism. So of course Trump and Jeremy Powell, which is the president of Federal Reserve of United States Feds, which is the treasury, they're the ones that are in charge in terms of interest rate and so on and so forth. So yeah, they had a crash. Powell and Donald Trump, Donald Trump saying that hey, Powell must resign and so on. But a lot of people they're saying that the treasury it is an independent entity and it has to run by independence, depending on the data that comes, that can support that treasury to make a decision. Data like consumer price index, data like producer price index, data like the GDP of a specific region. Those are the data that actually, help to the treasury to figure it out in terms of increasing the interest rate and or reducing the interest rate. So that's actually, the battle that it is at particular time. All right. So without wasting time, let's just check it out how the market is actually looking. Remember, we talk about the German elections and German GDP that actually goes, on actually, same level on estimation numbers. And we are actually looking at German 30, they call it the DAX, one of the biggest instruments in terms of the German combination of different companies as an indices and listed on a stock exchange, different stock exchange, US stock exchange, London Stock Exchange, they are there. Europe Stock Exchange, they are there as well in terms of representing the German company. So right now, it's sitting at 22,553 as the stock price. But let's look at it how the market has been going in a bigger time frame. Look at it where it's actually trying to go. So the market is trying to break the level of 22,713, but all this drop here, this is the drop of Donald Trump when he started to impose the tariffs, right? Immediately when he started imposing the tariff to different regions, Europe, this become a little bit of an incentive in terms of the investors, and then that's why we saw the stock itself starting dropping until the stability of Europe has been now given, including Madam Jessie Liggett coming up, cutting the interest rate, regarding the ECB, European Central Bank, cutting the interest rate so that they can just give a little bit of stability to investors or to economists in that region, to make sure that the stocks or economy should be able to grow. And we saw the results, as I said, that the GDP is just much in terms of the estimated. So that's not bad. It's not like the GDP goes below the estimation, but it actually go in the same level. Of course, you'll be dreaming or wishing that it must go above that level, but it come on the same level. It's actually much more better. So we see German 30 there. I'm anticipating that a little bit of stability of going, pushing the price up, recovery of course maybe to 22,713, somewhere around here, 22,713. That's what I'm anticipating regarding the German 30. The other instrument that was very, 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 talked, it's gold. We can look at gold right now falling, losing the momentum, but look where the gold is coming. And again, all right, let's put it maybe here. So all the way from around 2000 something, 2,500, 2,700, 2,800 from this side, growth all the way after Donald Trump imposes the tariff. So when people they lose the confidence in a dollar, what they do, they run to go and invest in a safe haven of the dollar. So the safe haven of the dollar, it's gold. So that is why we see the picking up of gold, pushing the price all the way up to 3,472, even above that level. If you might say maybe 3,501. That's really, really high price in terms of the gold. But again, it's been trying to depreciate a little bit because of, as I said, that the consumers and the economists, they've been now starting getting the momentum, the confidence, and the dollar has been now starting to reacting again bit by bit. Although a lot of economists, they're saying maybe it might, with US, they might face the recession this year, but some of the stats and the analysts, they said no, it's not going to happen. Remember how COVID-19, the stocks and the market was performing. This is exactly the same way how COVID-19 it was performing. So there's no panic to say that we might go to recessions. So that is why we're seeing gold right now is starting to lose the momentum in the market, dropping a little bit. I think it might go to 3,200 somewhere there. It is the opportunity for people to participate in the market when it comes to gold. But the other instrument that was really, really performed really crazy, if I may say, it's Bitcoin. We anticipated Bitcoin to grow from when Donald Trump become a president, right? Since he was inaugurated, we anticipated Bitcoin to actually grow, to go above 110,000, 120,000, 130,000. But what happened is because again of the tariff that Donald imposes to different countries, the crypto itself, or the crypto region, they started also panicking, losing the momentum, losing incentive in terms of the growth of the Bitcoin. So that's what we saw, the depreciation. All these, it's a depreciation of Donald Trump sanction impose, right? To 74, I think it will almost get to 60,000 again. 60,000, which is, that's the price. 64,000, that's the price it was last year, 2024, around September, October, right? And we were actually predicting that by December it will go to 110, 120. It did catch to 110, but didn't go above that. From 110, it started depreciating, going all the way to 75,000. Again, now the dollar starting again gaining the momentum, people starting getting a little bit of power, a little bit of stability to say that we can actually continue investing in the US stocks, in the US economy, and so on. We're seeing Bitcoin rising again. Now it's sitting at 95,219. Very, very pretty place. But I think my prediction, it will go again. I mean, a lot of people, they've been saying that, don't you think this is just a move that letting all the richer to buy the product in a very, very low price, right? And then when the product is growing, the price of the product or the price of the stock, it's growing, they are the ones that they're going to make money. So for example, if someone will have billions and billions of money invested in gold, while it was 74,940, you buy that, pay gold 74,000, you put millions of rand or millions of dollars, right now it's sitting at 95,219. How much percentage you gain from that, right? And these big guys, they invested in the big stocks, to S&P 500, to Nasdaq, Nas 100, US stated, to technology companies like Tesla's, like Nvidia, like companies like ChatGPT. But what really these guys are saying, that these guys, the investors, the forces, they force the president, or they force Donald Trump to push the price of the product or the price of the stocks all the way below, so that his friends, or his rich friends, or people who actually invest in economy, because obviously if you invest in the stocks and so on, you have money. It's not like someone who doesn't have money can be able to do that, right? So you need to have money and be able to be influenced to any other thing that will happen, whether it's a politics, whether it's a economics, whether it's a policy making, and so on. You need to have an influence. So they push all the price down, and people bought. Imagine if you buy Bitcoin at 74,940. Right now it's sitting at 95,219, and you invested with a big amount of money. How much you could have come up with? So that's what pretty much we're thinking. But again, opportunities are still there. I think it's still gonna go all the way maybe to 110,000 and actually break that level, starting to form a new highs, maybe to 115, going to 120. By the time we get to June, July, the coin, it will be above 110. I think. I pretty much think so. All right. Going to the biggest stocks in terms of technologies, Nas 100 sitting at 19,505. The last time Nas 100 was at 19,000, it was during COVID-19. I think Donald Trump is just reverses everything, reverse the stock back to 2019, where it was before COVID-19, right? Let's look at it on a bigger time frame, guys. All right. Look where the NAS 100 actually dropped to 16,408. The last time it was on a 16,408, it was on 12th November 2023. So if you look at it, if you go on this, it's going to show you properly. This is the last time. Okay, do again. Around November, December 2023, that's when NAS 100 dropped to that particular price of 16,224. But Donald Trump pushes the now it's 2025. He actually pushes that price all the way below to that, letting people who have money again buy it at a lower price, and now it grows. Now it's sitting at 19,562. So think about how much margin these guys have been actually making in a market. So it's pretty much choppy market, but to those who are studying it, is that the market had to go all the way down because of everything that Trump's would have to come to bring it before the 100 days in office. And then that was the opportunity for a lot of people to buy it at a low level and grow with it. So we're seeing same thing happening to instrument like a US30. If you go to a bigger time frame, same thing, it's going to show you drops all the way to 36,740. Right now it's sitting now at 40,550. Right, so much margin has happened, but again there's so many opportunities in terms of growth, because the highest high of US30, it's 44,000 to 45,000, right? So it needs to get to that level and then start forming the new breaking zone of this instrument. The other instrument as well, it's S&P 500. Again, if we go and check it out, S&P 500, it's coming from 61,000 and 6,108, which was S&P 500. I've been speaking about it. It was the most breaking record instrument in terms of the gains in 2024. So it gained so much from 4,000 to 6,000, right? The stock price itself in the market for the period of 2024. Come 2025, Donald Trump comes, pushes the price back again to 4,800, but right now it's sitting at 5,549. Again, who benefit for these things, right? For that drop, you get it from the bottom and take it all the way up. Who benefiting from this market is those who actually invested and those who actually buy it at a very, very lower price. And again, I'm saying the opportunities are still there, because it has to go back to where it was and break and do some new high highs and form some new records. So pretty much the bullish movement, it's on play, as well as in terms of European stocks or American stocks. The bullish market, it's actually on play for this week to next week, and then it will be just a little bit of a resistance, just the retesting here and there to see, retesting the price here and there, just to see where the market it has destabilized. But pretty much we are in a bullish zone, bullish market. But yeah, that's it when it comes to market analysis. When it comes to the news, we're gonna check it out when it comes to high impact volatility that can affect the market as well this week. All right. So in terms of the high impact volatility, these are the news that actually from this week they're going to affect the market, whether positive or negative. The ones that shows red, those are the ones that has a high impact volatility. If you can see it, it's written high impact expected. So we're expecting on Monday, April 28, the federal election from Canada, Canadian elections that are happening. Bank holiday from Japan, coming on Tuesday. There's the job openings from USA. So before they report the jobs, they always comes with the job openings to see how many people they are actually, how many openings in terms of the opportunity of the jobs they are available at that time. Presidential Trump is speaking on Tuesday as well on 29. Wednesday, there's consumer price index from Australian dollar, as well manufacturing PMI from China, of course. From China, we're seeing also German premium CPI, consumer price index from German, that will happen it will push instruments from euro and the eurozone instrument. And then Canadian GDP and ADP non-farm employment from US as well. That comes on Wednesday 2:30 p.m. So GDP from US, GDP from Canada, and as well as USD, a non-farm employment change. So non-farm employment change, ADP non-farm employment change, all these coming on Wednesday. So on Wednesday later on also, there's PCE index, price index, actually measures in terms of the price of the goods, how much has been increased, how much has been dropped. That data, it's needed to Treasury or to Federal Reserve, in terms of the decision of making of interest rates. And then there's also a bank holiday from China that we're seeing on Wednesday. Thursday, the 1st of May, BOJ, Bank of Japan, is coming up to speak. We'll see in terms of the rate, whether they're going to cut, increase, or put it on a pause. Japanese monetary policy statement, which is Bank of Japan press conference that come and announce the interest rate. So we'll see the Japanese yen, I think it will have high impact volatility. But in the Eurozone, there's a holidays and a French holiday. French bank holiday, German bank holiday, Italian bank holiday. So we're not expecting any high movement when it comes to the Eurozone and GDP zone. But mostly on the Eurozone, it's not going to move that much on Thursday. US, it has an employment claim, and again, manufacturing PMI, how much manufacturing products are happening in the country and what are they actually doing. Bank holiday as well in China on Friday. There's a lot of bank holidays this week. And again, going all the way the Friday, the last ones, it's a non-farm employment change. So non-farm payroll is coming on Friday because it's the first week of a new month. It will be on the 2nd of May. All-day parliamentary election. Okay, so Canadian, they're actually electing the presidential election. Australian, they're gonna have parliamentary election on Saturday. So that's pretty much in terms of the news, high impact volatility news that can affect the global financial market, mostly the forex market, the contract for difference market. If you look at this, look at the instrument, see where the volatility is going and take advantage from there. Okay, so thank you very much for watching this video. It was the market analysis of the week. We're checking the market and as well as what actually affecting the markets in terms of the global politics. The big one, it's 100 days in Donald Trump, and again the big one is Jeremy Powell, fighting or having big word exchange with the president-elect Donald Trump, when it comes to the policies on interest rate of the United States. So we check on the market, we see who's going to benefit when it comes to dropping of the market to the lower price and people buy it at lower price. And now it's actually starting, growing. And that's where you're going to see that people who invested at a lower position of the market, right now they're actually making a lot of money. And a lot of people that can be able to do that, it's people who have money, which is people that are investors, the big guys, the big guns. So they're the ones that are actually chowing at the moment. So we check it out on that as well. So thanks a lot for watching the video. Please subscribe, guys. Please just put the subscription button there, place it, please. And yeah, I do appreciate it. Thank you.